Hey everyone, welcome to the live stream. On this stream, we will be talking about the stock rally we are in that really has been going on for more than 2 years. It started in late 2022 and it continued into 2023, 24, and now we're into 25 with the market deciding to go up. There's a lot of news out there. I try to summarize and kind of discuss what's driving this market. One thing that should not be lost is, you know, investors are going to win. Investors are going to stay ahead of inflation. Investors are going to make a lot of money, and smart investors that continue to get better month after month, investing in great businesses. I mean, we are flourishing. I've got a great start to 2025. It was a great 2024. It was a great 2023. So this is why we invest in stocks. It's so that you can take your capital that you worked very hard to attain and grow that capital. I like some expressions that some legendary investors will use, like Warren Buffett will say, if you don't find a way to make money while you sleep, you will work till the day you die, meaning that you need to have capital invested in the market and have that capital appreciate, have that capital work for you so that over time you're not having to, go work or run a business or do gigs in order to support yourself. You can have your investments support you, support the people you care about. And you may work because you enjoy it, but you don't have to. You're well capitalized because you were an investor. So this is the time to really just grow wealth, grow your capital, see that capital appreciate in the form of stocks, crypto, and other assets that are really working. So the NASDAQ, it went up 1.28% today, had a very nice day, and it was led by some big technology names. We'll go over those in a bit. The S&P went up 0.61%. The Dow is having a really nice couple of weeks. The Dow was up 0.3%. Then the Russell was down for the day. Small caps did not work today, but the Russell's doing fairly decently as well. Taking a look at the yearly chart for the NASDAQ, it is up 30%. Such a beautiful number. Again, investors are winning. People that have decided, hey, I want to take more of a driver position in my wealth creation, and investing in stocks or ETFs or whatever. Just putting capital into this market is really important. It's almost like real estate. If you don't buy real estate and you just wait, or maybe never buy it, you never participate in the appreciation, which we've seen in real estate as well. So be an investor, put money into the market, have that money work for you. I like waking up in the morning knowing that my money worked all night while I slept like a baby, if you know what I mean. That is the reality. If you have money invested in the market, you're going to do well. Now, as we look at the year, right, the NASDAQ is number one. It's where the technology stocks exist. It's where high growth exists, and or a greater concentration of it. The S&P is doing great, 25%. The Dow, not so much. The Dow hasn't done all that great. Those are the more old school companies. And the Russell is doing okay, 16%. Now, these numbers, 25 and 30, these are just great numbers. Historically, if stocks perform at 10%, we're very happy. Now we're like 20. Hey, Mike, you love your dividend stocks. Earn while I sleep. One of my favorite things about dividend stocks is you're right. You wake up and the dividend stock paid a dividend and that money's deposited in your account. That is fun. Feels a little bit like there is a Santa Claus. He dropped money into my account, to my brokerage account. For example, Chevron pays a 4% dividend, and they're going to be paying that dividend soon. And I own a fair amount of Chevron. So that one usually shows up. I usually see a nice chunk of change, nice chunk of cash come into my account. So that is very, very fun. I agree with that it is fun. It's almost like, Christmas happens throughout the year because your dividends keep giving you money, and you can reinvest it. You can pay for stuff. You can do whatever you want with those dividends. So overall, the market's doing great. Yesterday on the stream, I think a few younger investors were online, which was great. They had some good questions. And in general, whether you're new or, whatever age you are, I really encourage people to just continue to learn about investing in stocks, investing in dividend stocks, investing in growth stocks, investing in a variety of stocks. Have a good process. Find a place in the stock market because it's so big. You can find a place for yourself, a place where you can use your life experiences in your favor, whatever industries you've worked in or are very familiar with, or find a big interest in, invest there, and you'll probably do better because you have that knowledge advantage. So just keep learning, keep getting better. And over time, your capital will continue to appreciate. You'll have a bigger brokerage account balance. And with that, you'll be able to do more things and pretty much really just, establish that financial independence, financial empowerment. And it becomes really fun. It becomes fun. Like January's been really fun for me. I'm up big already in January, and, that's great. We still have 7 trading days to go. So I'm not going to recognize a win or a loss for January. I track my performance each month just to see how the month was. I get a statement from my brokerage account, and I compare the two to see what happened. I like to track how much I'm making per month, per quarter, per year to see if I can continue to grow my portfolio. All right. So the market's doing well. Let's look at the year-to-date chart. That'd be interesting to see. What has occurred is we've had kind of an orderly sell-off. It started in December, and certain industries kind of sold off, which was good because they were really high. But so far this year in 2025, the year is young. We're 3 weeks into it, and it looks like the NASDAQ's doing well, up 3.6%. The S&P is up 3.48%. The Dow is at 1.72%, and the Russell up 3.3%. So it's green all over the place for 2025. When we look at crypto for the year, now Bitcoin had a phenomenal year, right? It was up 100, measuring from today, if you go back 12 months, it's up 160%. Very satisfied with my performance on Bitcoin. But year to date, let's take a look. It's up 10%. What's not to like about that? And I think that it could really just take off. It could really just start going crazy. And that'll be interesting to see what happens. I own crypto. This is like this. I've invested the smallest amounts because, frankly, this is so new. I don't want to bet the farm. And why isn't this letting me compare to Ether? There we go. Okay. So it looks like I doubled down on that one. And I started to buy into Solana. Let's see if it's going to show me Solana here. No, it's not going to show me Solana currencies or coins, excuse me. Yeah, it's not going to show me Solana. But I started buying into Solana. I've heard good things. I've heard that certain projects are getting developed on Solana. So I went for it and started buying. I mean, I buy small amounts when it comes to crypto. I want to play it safe. The returns have been great. What I've heard on several occasions that Solana was, a lot of developers are developing on Solana, but the one that put me over the top I'm a PayPal stockholder, so I was doing my homework on PayPal, and they developed their PayPal coin on Solana. I'm like, hey, there's one more example telling me that maybe Solana is a good coin to have. So I started buying a small amount today. That's my very first purchase into Solana. I'm a dollar cost average guy. I'm going to buy over time. I believe in crypto. I believe in the space, and I think it's going to go places. I think the development on cryptocurrencies is going to go much faster. I think the last 14 years, it's been around for more than that. It's been around for like, call it 15 years, 16 years. At first, crypto was somewhat of a obscure, topic. What is Bitcoin? Nobody knows. And then it went from it being a completely speculative asset, like, oh, only gamblers buy Bitcoin, to, powerful people really bad mouthing Bitcoin, to now ETFs are being offered for Bitcoin, and it's over $100,000 per coin. Now, a lot of the mainstream financial people are talking about Bitcoin. And with the new president and the House and the Senate being friendly to cryptocurrencies, I think the next 4 years are going to be very helpful to the cryptocurrency industry. The last 4 years have been kind of just a real tension between this industry, which is born in America. It can be developed in the US. It could really become like something that's special. We can have it developed here. And with all the pushback, I mean, literally they were pushing it away from the US, which is a bad idea. I'd rather keep AI in the US, technology in the US, and Bitcoin and cryptocurrency in the US. So it's good to see Bitcoin is flourishing. So the stock market's doing well. Crypto's doing well. Interest rates are a little high, but they have been coming down a little bit. That's good to see. Are they going to go down very quickly? I don't think so. I think we're going to be hanging on to some higher interest rates for a little longer. So that means that mortgages are going to cost a little bit more for a while. And that's just the way it is. There isn't any reason why we have to be freaking out about lowering interest rates just yet, because the economy is doing okay. There's no reason to start forcing interest rates down. And we'll see how that plays out. I think the stock market's doing fine with the current interest rate level. The economy is doing fine. We'll just kind of let things play out. All right. So looking at sectors, today, the sector that led the charge was technology, and it was way out there. Kind of broke off from the rest of the market, up 2.46%. It was a gigantic story with the president announcing that there was a joint venture of companies that are going to form this AI joint venture. And the market got really excited. ChatGPT, or OpenAI, Oracle, and SoftBank. So that became just a real big reason why semiconductors rallied, just the whole space rallied. So it was really interesting to see. In addition to that rally, other companies, I know Meta rallied well, and that's communication services. What was in the green today was healthcare, just barely, and then industrials. Industrials are having a good year so far. So I wanted to note that. The number one sector for year to date is still energy. Energy is still on top. And we'll see where they end up. So far, let's take a look at the year to date. So year to date, energy, number one. Utilities, of all sectors that I would have picked to be like top three, I would have never put utilities in there. But now they're super hot because AI is supposed to pull a lot of electricity, and power companies are supposed to become really, really important. Industrials are having a good beginning of 2025. So that's interesting. So it's good to see a rotation. Like, hey, it's not just technology that's just going to be cranking along and everything else is just barely getting by. No, we're seeing some good performance across, industries and sectors. For example, utilities surprised me how well they're doing. That's good. That's good rotation. That way we could see a good balance in the stock market. Now that's the sectors. I like looking at the S&P. This is a heat map, and if it's very light or bright green, that means that company did really well. NVIDIA was up 4.43%. It is now the most valuable company on the exchange. It took the title from Apple, and I'll show that in a little bit. Microsoft had a really good day. I've been really investing in Microsoft. It started about a month ago. I saw that the stock underperformed for 2024, but it's just such a great business, and I believe it's discounted still. So I've been buying into Microsoft as fast as I can. I will continue to buy because it's such a good business. I mean, I'll invest $100,000 in Microsoft and feel good about it. Other within semiconductor, Qualcomm did really well. Looks like Broadcom went up just a little bit, and AMD went up 1.2%. So some things really worked today. Microsoft was up. Palantir was up. Software application space, Salesforce was up. ServiceNow was up. So the technology space, as I showed earlier, it just really made it happen today. Just an awesome day. Moving away from technology, Amazon's a big, I think, kind of a technology company, but they're actually classified in consumer discretionary, the most valuable consumer discretionary stock out there. And it was up almost 2%. This was a big move that I made in 2024, investing a lot in Amazon. I'm really glad I did so. It's ended up being a very good idea. I've seen really good appreciation in my shares. So that did really well today. And Tesla did not do well. So those were the notable names within consumer discretionary. Home Depot is down. Interesting. Now, outside of that, communication services, Meta is up. It's the second biggest company in that particular sector. Google is number one. Netflix was flying high, up almost 10%. They had a very good earnings call yesterday. So good stuff. Healthcare, Eli Lilly's having a good day for a change. J&J, we're going to look at that in a bit. They announced it. I thought the earnings looked good, but the market didn't like it. Sold it off by about 2%. Then energy, man, look at that red. It's like a Christmas decoration over here. It was pretty red over there. So that's the heat map. Looking at the mega caps, NVIDIA is now the most valuable company. They took the title from Apple. And if you look, Microsoft's kind of catching up to Apple as well. Apple may end up being the third most valuable company because they are down. They're in correction territory for 2025. They're down more than 10%. So that stock's corrected. And they're going to announce next week. And if the announcement is negative, they're going to fall. I don't know if they're going to fall away down to Amazon's level, but they're going to fall. And I think over time, Amazon and Google can surpass it, but we'll see. All these are humongous valuations. I mean, these are massive. So there's a lot of green on the big caps. Tesla's down a little bit year to date. Berkshire's down a bit, but things are looking good for the big caps. Carlos, very good to see you. So you want to look at Jazz. I think, is that a semiconductor company? So we can look at it. Just bear with me. I've got a couple of, I've got stocks that members of the community asked to take a look at, which I'm going to cover. And then I'll get to Jazz. Omar, good to see you, man. And Omar, I love software companies. I love your comments too. And the reason I love software companies is that I've worked in the software industry for a long time. So I really understand them, and I invest in a variety of software companies. and I'm happy to do so because I think they're very good businesses, very high gross margins, very high free cash flow, and I have that knowledge, so I use that knowledge in my favor. So I like investing in software companies. But you invest the way you want, man, and keep the feedback coming. You made me smile when you had that comment. So thank you. All right. So HAFN. Not familiar with it. Jazz is in the healthcare. Okay. Let's take a look. We'll look at Jazz a little later and see what they've got going on. Okay, so let's go over. First one is going to be a request from one of the members, and that's VRNS. That's Varonis Systems. Varonis Systems provides software products and services that allow enterprises to manage, analyze, alert, and secure enterprise data in North America. Sounds like a security software company. Yeah. Protect data both on premises and in the cloud. Okay. So this is a security company. Pretty good size, 2,200 employees. All right. And I'll take a peek at their website just to see what they're all about. Yeah, it's a security software company similar to CrowdStrike or Palo Alto. Looks like they have good ratings from the analysts that cover this industry. Gartner's the most recognized name. Forrester is also a recognized name. I'm not familiar with this one, but I'm familiar with Forrester and Gartner. All right, so I'm kind of got a sense of what these guys do. They're similar to CrowdStrike, Palo Alto, Zscaler. So let's take a look at the fundamentals behind this company. So this is it was down 1.34% for the year. It's pretty much flat. It had a nice run up and then it came back down. So looks like they hit their peak October 15th. And since then, the stock's gone from roughly $60 per share down to $45 a share. That's a pretty good drop. That's 35% drop. So that's a pretty good drop. It's a small cap of $5 billion. Revenue is $546 million. They're going to announce on February 4th. So we're roughly about 2.5 weeks from that earnings being announced. Looks like they're not profitable yet, but forward PE, I think this is 2025, they're going to be slightly profitable. That's why you see such a high PE. Analysts like the stock. They think it's discounted by 32%. And they're saying, hey, it's a good buy. All right. So they're a $546 million business that's growing at 12%. That's good. That's good growth. It's not great, but it's good. In their space, I know that others are growing faster. Okay, so we got 12% there. They are generating free cash. Very good. And gross margins are excellent, 84%. That's why I like software companies, because they have super high gross margins, super high free cash flow. Very good combination. So this business, the type of business it is, I'd probably go 20 to 30 times free cash flow. That puts us at probably about $2 to $3 billion of value. You could stretch it up to 4, but I think this one might be a little too expensive. We'll see. Let me take a look at their balance sheet. I want to make sure they don't have too much debt. In the case here, they have more cash than debt, so they can pay off their debt immediately if they wanted to, because they have more cash than debt. That looks good. Let's take a look at their forecast. So analysts will review a stock, and 18 analysts cover this stock. So that's good. We have a lot of opinions on this stock. And some are very optimistic, saying, hey, this stock could get up to $70 per share. The most bearish opinion puts the stock at 46. So you see where that pullback has really brought the price of the stock way down, potentially opening up an opportunity to invest in this company. But we'll see. We'll look at the fundamentals. So looking at, on average, they think the stock is discounted by 32%. I like looking at this revenue forecast because this is a consensus forecast. And for 25, they're going to grow at 12%, 26, 15%, and then 13% in 27. It's a very good forecast, very positive. And they're going to get more profitable. They're going to grow. They're going to expand their earnings per share very nicely. So that does look good. Earnings per share may support the stock price that they have, but the trick to it is, it's let's take a look at that free cash flow again. I'm going to look at the actual statement. And it's 97 million for the trailing 12 months. But let me look at the most recent quarter and see what their run rate is, maybe the last quarter, maybe the last 2 quarters. And yeah, the last quarter was only 21 million and then 10 million before that. So I have to, kind of respect that they're probably going to go cash flows, but it's not going to be a smooth chart. And the best I can do on this one is say it's this company's worth 3 to 4 billion at this point with the current cash forecast that they have. I think it's a really interesting business. But the other reality is you can invest in CrowdStrike, Palo Alto, Zscaler. You can invest in a variety of ones. And I think Zscaler really is discounted at a really good rate. I'd rather invest in Zscaler. I think it looks really good. So I'd have to pass on Varonis Systems. I think I would give it a couple quarters. And if they have really good results, and it really shows they have the upward trajectory on their revenue growth and their free cash flow growth, we would, then maybe this stock's a good buy at that point. But the scare that investors have had recently may be founded, right? They might be like looking at the numbers going, hold on a second, this business is not quite good enough. Not yet. Maybe it'll get really good, but it hasn't gotten there yet. And there's some competitors in their space that have really good numbers. So just be aware of that. It looks like Mike, I have Zscaler, but so you have a small position in it. All right. Well, I hope it works. Now, I'm not saying that they're not going to turn into a really, really promising stock. I'm just saying the data is maybe a little, it needs a little time, maybe two earnings releases, and then we can really get our heads around what's this business really going to do from a fundamental perspective. So that's my opinion on VRNS. And thanks for asking about this one. That one looks really interesting. Looks like Tomas joined the call. How are you, sir? Very good to see you. And hope you're having a very nice evening. So, yeah, you and me, sometimes I look at a stock and I think, man, it's just a really neat stock to have. And I've done that before as well. All right. So moving on to the next one on the list. I wanted to do a full valuation on ICE. ICE came up. Another community member brought it up, and I thought I'd do a complete valuation. We can do it together, kind of like start from scratch and do everything there is to do. So this is an exchange. This is the Intercontinental Exchange. Together with its subs, engages in the provision of market infrastructure, data services, and technology solutions. So when you look at like NASDAQ, that's an exchange. The New York Stock Exchange is an exchange. These guys manage exchanges where it's a marketplace. That's what they do. And they also sell data. It has a market cap of 88 billion. $9 billion of revenue. So I'm going to go through and do a complete valuation of this guy, and we'll do it together here. I'm going to open up another screen that has this data. It's going to have this data. That way I can use two screens in my favor, and we'll go from there. So I am going to open up my valuation schedule, and we will put ICE in there. Now, ICE is not like any other company I own. I don't have any exchanges in my modeling, but you know what? This one looks pretty close. This is an insurance company, so it's going to be as close as I can get. All right, so we will change this symbol. And what was the name of this business? It was Intercontinental Exchange. So I'm going to go with an 8 here. It's a domestic company to me. So I'm going to go with 8. Now let's get into their financials and see what they've got going on financially. The trailing 12 months of free cash flow for this company is $3,774,000,000. And they've been growing that number nicely, which is one of the things that I liked about this business is they have really consistent growth. Are they growing? They're growing by like 11, 12%. So play it safe and go 8% growth. I'll grow this. This number here represents what I expect 2025 to be. And it's going to be the trailing 12 months plus 8%. So I'll use that. Now the intrinsic value, why did that number disappear? The intrinsic value of all these cash flows, and that's what I'm buying when I buy this business, is all the future cash flows is $106 billion. Now let's take a look at to see how much cash and debt this company has. We'll put that in here. They have $755 million of cash, $21,520,000,000 of debt. Look at that, $85 billion of value. Now, how many shares do they have outstanding? They have 574 million. So they're actually priced at a 4% premium. If you compare the value of those cash flows, you add cash and take away debt, it's fairly priced according to free cash flows. Well, that's not exciting. There's some exciting stocks out there that are nicely discounted. Let's carry on, see what earnings per share look like. So the earnings per share are expected to be $6.79. This is a growing business. It's single digit. They're going to grow like 6% a year. So I'll go with 18. I'll grow that by 5. So this stock is not discounted. It's actually being priced at a premium. It's not a super desirable business to me. It's just an exchange. And it's not like Microsoft, which is really desirable. And I'm willing to pay market like fair price for Microsoft because I want to own it. That's a different conversation. There's companies that are very desirable like Microsoft or Google or Meta, but this one isn't in that category. So this one's going to be a total pass for me. ICE is a pass. It doesn't value high enough. And that completes my analysis of Intercontinental Exchange. I will move on and try to find something that gives me a better price so that I could expect my stocks will go up in value and I can make a lot of money on investing in that stock. This one does not qualify. So we'll get rid of that guy and move on. All right. So that was Intercontinental Exchange. All right. So got that one done. Now let's take a look at some of these stocks that came out of the earnings. So today there were some pretty well recognized names like Procter and Gamble, Johnson and Johnson, Abbott, GE Verona. I wanted to take a look at that. I believe that's the utility. And before I jump in there, Tomas, you want to talk about Mercado Libre? Man, I would love to talk about Mercado Libre because I think the stock's been moving. We went over Mercado Libre on the investor calls on weekends, analyze this stock, and this is a stock that I was watching. Man, I'd really like to invest, and the stock really went up in value, and I'm like, oh no, but then it came back down. I'm like, hey man, I'm a buyer. And I'm glad I did so because it's doing okay in 2024. And if you look at the past 30 days or so, let me look at Mercado Libre on Google because I like their software is a little nicer to do charting. But if you go from the bottom to the top, it's up 7%. So Mercado Libre is, doing okay. I think they have a very good future. I like their position or their strategic position in Latin America. So far, so good. They have very good growth, 35%. Yeah, that's good growth. This is all in US dollars. And when I do the valuation on Mercado Libre, it's I think it's still discounted. Yeah, it's still discounted, I believe, by 27% because their cash flows are really good. Their earnings per share support the current stock price, but this cash flow, this is where the money's at. This is what most of the successful investors like Warren Buffett, they look at cash flow, and Mercado Libre is getting it done when it comes to cash flow. So I still think it's discounted, and I'm glad that I bought into Mercado Libre. I bought into it quickly. It's easier to buy into Mercado Libre quickly because the shares are so darn expensive, $1,800. And they're going to announce on February 20th, so in roughly about a 1 month. And I'll definitely cover the stock when they do an announcement. But if you have any more questions, let me know on Mercado Libre. Glad I got into it. I own Mercado Libre, I own Amazon, and I own Alibaba. I like e-commerce. And it looks like AP. Do you believe that Amazon investing into Mexico, Latin America will result in Medellín's decline? The answer is no. I think the cultural differences between, so Amazon's an American company, awesome company. But to expect that Amazon's going to do, because they do like 100 different things. They run their e-commerce business here in the US. They have the AW business, which is doing great. They have their streaming business, which is doing great. Well, at some point, you're not going to be able to adapt as well as Mercado Libre that's just focused on Latin America. They're going to do e-commerce in Latin America. They're going to know what catalog to put on their website for, that region, whether it be the Brazilian region or Brazilian country or Mexico or Uruguay or, whatever the case may be. And I think they're going to have that advantage over Amazon. I think the world's big enough for both of them to be successful, but I think Mercado Libre will be more successful than Amazon. And I think Amazon has not been, super successful in China. Alibaba is the dominant force there, as well as around Asia. Alibaba has the cultural advantage there. They know that region. They know the products that should be marketed. So that's my answer to you is, Amazon's not going to disrupt everything. I think what they do is very good, but in some places and spots, they're not going to they're not going to be great at everything. They're going to be really good at what they really focus on. And their focus regionally is here in the U.S. and they also do really well, I imagine, in Canada. But that's my opinion on that. So that's Mercado Libre. All right, so coming back to some of the stocks that announced today, Procter & Gamble announced, and their stock was down for part of the day. It went down, then it looks like it came back up, or I could have sworn that it was down for a little bit. Maybe in the pre-market it was down a little bit. But it looks like it's doing well for the day, 2%. Has a reasonable PE, but as you'll see, these guys grow very slow. It's such an old business. They don't have a lot of addressable market left. They already have the market. It's a dividend paying stock. I know there's dividend investors out there that probably love Procter & Gamble. Analysts think it's a buy with a 9% discount. You see that the growth isn't overly exciting. 2%, 2.5%, 0.5%. So not overly exciting. It is already a big business. And their cash flow, see if it's expanding. So cash flow looks good, but it's been somewhat stable, right? It's not like upward trajectory. It's been upward, but more subtle than high growth. So it's a quality business. This is a quality business. It's good for somebody who wants a nice, safe stock. It is a consumer staple. It's not for me. If I want stability, I'm going to buy bonds. And what I want out of bonds, out of stocks, is I want the stock to double every 5 years. This one's up 30% with that dividend. Let's call it 40 to 45% return. And for some investors, that's fine. That's like a 9% rate of return. Great. But I'd rather, reach for 100%. Then I can double the value of that stock every 5 years. I can double it. So Procter & Gamble had a good earnings. Good to see that. And the stock is going up a little bit. How are they doing year to date? Year to date, they're down 2%. So not everything's good at Procter & Gamble. Johnson & Johnson, down 2%. And I think this is the stock that I was thinking of earlier because their earnings, I think they were good. They grew their top line. A lot of things, to feel good about, but their stock went down, which was kind of surprising. For the past year, they're down 10%. The last 5 years. Man, this has just been not a good situation. Healthcare has just gotten beaten up, especially pharma. And these guys are partially pharma, and they're kind of a diversified healthcare company. They pay a nice dividend at 3.41, I think because their stock price is down. That's what causes that dividend to go up. PE is really low, 14. Jeez, some of these healthcare stocks look so good to me. A PE of 14 for Johnson & Johnson. Johnson & Johnson has a lot of respect. These guys have awesome credit rating. They've been around forever. They have great products. They have great name recognition in the market. Just a lot of things going for Johnson & Johnson. For some reason, the market just does not want to pay up for healthcare stocks. Analysts think it's a buy and it's discounted by 19%. So it looks like the numbers from their earnings are not loaded, but they grew about this amount. I read the earnings earlier today, and they grew about that amount. So they continue to grow single digit consistently. Free cash flow is just massive free cash flow, $20 billion. And just a really well-run business. Gross margins, 69%. This is a quality company. I own Pfizer. I don't want to load up too much on big pharma, big healthcare. But this one is a quality stock. And we'll see what happens. But I was surprised that Johnson & Johnson did not get more love than they did. But that's where we're at. Yeah, it looks like Elevance is going to report tomorrow. I'm looking forward to that. I'm feeling like they're gonna come out and have some good things to say. Elevance has been doing okay. If we look at Elevance, let's take a look at year to date. Year to date's up 6%. It's had a rough year, but this is good news to a stock investor. It's like, hey, if these guys are discounted and you're giving me a better discount, or excuse me, this is a good business and the market's selling it off, not due to fundamentals, due to other factors. Like these guys are in the same industry. They're the number 2 player behind United Healthcare. And the assassination of the CEO of United Healthcare. I mean, that was just a horrible situation, but these guys are caught up in the same industry dynamics. So these guys are reporting tomorrow. That is going to be something I'm going to look at and see what's going on because I am an investor. When I look at Elevance, I see good things. Elevance is a healthcare insurance payer, and I think they're severely discounted, like big time discounted. And I continue to buy shares because of that discount. They don't pay much of a dividend. They neither they nor United Healthcare pay a very high dividend, but even analysts agree that Elevance is discounted, in a big way. And they don't look at free cash flows like I do. They just go earnings per share. And they're saying 38% discount. So just in general, I think there's a lot of value to be had. This is a growing business. It's a very big business. And if they can expand their profitability, this business is just going to go up in value. Over the last 5 years, healthcare has been in this weird zone for the last year, but you could see that this stock was really picking up value nicely. And then more recently, it came down. So this coming down is an opportunity, picking up some shares. So you're down 3% on Elevance. Well, hopefully they announce something good, and they're going to announce tomorrow. And they're going to announce before the market opens. So hopefully they announce something good and you're back to even or maybe in the green. Let's see how it goes. Yeah, healthcare has just been a weird industry for me or sector, because for the last 30 years, some healthcare stocks for me and some healthcare ETFs and mutual funds have just been winners all day long. And then over the last couple of years, they just haven't worked, and it's been a surprise. Tomorrow, speaking of earnings, we're going to have Elevance, of course, we just talked about it, but we have Intuitive Surgical, which has been a high appreciating stock. We'll see what they have to say. General Electric, Texas Instruments, which does semiconductors, Union Pacific Railroad, CSX, which is a railroad, Freeport McMoran, and I think they do materials, and then some others. I think these guys do spices, but they're small cap here, and they're a very established business. So it's going to be a pretty active day tomorrow, especially before the market opens with GE, Union Pacific, Elevance. It'll be a fun morning. And I'll try to record a video on Elevance. So I'll probably record it and release it before the market opens. So check out my channel if you want to see that, Mike. So that's Elevance, and those are the earnings we expect tomorrow. Abbott is also a healthcare company, and they pay a 2% discount dividend. Their market cap's $204 billion. Revenue is $42 billion. Real big company. Analysts say that it's discounted by 10%. They announced earnings today, and their stock went up 8.85%. So market liked what they saw. Their financials have been loaded in. Looks like For the full year, they grew 4.59%. Very good growth because they're a big company. Abbott has good free cash flows. Their margins are 55%. This is a quality business. These guys have been around for a long time. And overall, analysts, let's see what there's 15 analysts that cover Abbott. They think it's 10% discounted. They're expecting the company to grow by 7% in 2025, 7% 26, and then 6% 27. That's good growth for a big company. And earnings per share will expand. So it looks good. Looks like a good, solid company. Growing well. Not, see what the appreciation has been. No real appreciation, but I think I've said it, healthcare stocks just haven't been working. We'll see if that changes. If it does change, this could be a nice little stock to own. They pay a nice dividend. So that is Abbott Labs. This is the one that I want to look at. This is an energy company. And I was in the gym and I saw a report on one of the, stock investing channels. It was either Bloomberg or CNBC. And what they said was the revenues actually missed. They didn't have as much revenue as they had guided. So see, they had an earnings miss. So they missed on earnings, but they're caught up in this AI and they're going to need a lot of energy. And of course they said, hey, our customer is going to be, those big three that are going to be a part of that AI Stargate thing. Of course, you're a power company. Who wouldn't be your customer? If they're in Texas, operating in Texas and whatever regions GE Verona's in, of course they're going to be a customer. So that was my observation. Because if we look at their stock and how it's done, right? 271%. So for me, I look at it, the appreciation of a stock that goes up that fast. And I think, well, they must be growing their revenue like incredibly fast. Let's take a look. No, 5%. It's like, what? Why is the stock like more than tripled in value, but their growth is 5% and they missed on earnings? What am I missing? What am I missing? Then you look at their profitability and they have gross profit of 17%. Really? These guys are red hot and they have 17% gross margin. That's not the definition of an awesome company. Their free cash flow, 1.7 billion, which would be, man, that is a tall market cap. So needless to say, I don't believe in these valuations. I just don't know who is cooking up hey, these guys are going to make a lot of money in the future. Really? Well, they're not making any money now, or not a lot of money now. So what makes us think that they're going to be incredibly profitable in the future? I showed you a software company earlier, that security software company that had 80 some odd, percent gross margin. Johnson & Johnson was at, I think, 50% gross margins. And those industries have more favorable margins. And their free cash flow, these guys usually have to put a lot of CapEx back into the business. So this one here has been the industry and sector is just a big surprise for me. Utilities and the way that they've been performing. If you're a GE Verona stockholder, congratulations. That is awesome. But I just can't explain it. It's like, wow, how can a stock go up that much and have fundamentals that are this poor? I want to say they're not even average. They're terrible. I've never liked utilities because they have terrible fundamentals. Yeah, and I get that. So back in my accounting days, I was a controller for a pharmaceutical device company, and we had this big um, pharmaceutical device factory, and we consumed a lot of power. And I was able to negotiate the power consumption. And yeah, you negotiate contracts, you can have stable energy prices. And we negotiated a 5-year deal. And you can negotiate a 5-year deal, 10-year deal, and you can do that. That's normal. Like, yeah, you contract with your customers for the next, 5 years. That's normal. That's what you do as a normal course of business. So again, I come back to, for the time being, I'm the one that's wrong, right? I have a certain, you know, opinion of utilities, a certain level of expectation out of fundamentals, but that's kind of out the window. These guys are up 271%. So I don't get utilities, and that's fine. Somebody else can invest in them. I'll make money elsewhere. I'm having a great year. I'll stick to the industries that I get. But everything I hear about this industry, I'm like, I do not get how people are thinking that there's a lot of value in this. It's one thing to look at like OpenAI and think, man, the margins are going to be like 90% margins, and it's going to be an expanding new business. Like AI didn't exist before. The addressable market's going to be massive. Okay, that could be exciting. Utilities, not so much. They've been around for a long time. It's a known commodity. They in a lot of places they're regulated. You can't increase your prices all that much. So we'll see how things play out. We will certainly see that. The other dynamic that I'm seeing in this is, they're very excited about nuclear. And if I know enough about nuclear to know if you decided today, I want to, I have all the money, all the capital, I want to build a nuclear power plant. You might be able to flip the switch and start generating power, best case in 10 years. It'll probably take you 15 to 20 to go from, I have all the money, I can build that power plant. So the whole excitement around nuclear power, I think, is like a head scratcher. I'm like, but you're not going to make any revenue for like 10 years. So are you going to be waiting around for this stock to finally do revenue in 10 years? So we'll see. Yeah. So this one here, big surprise. But again, at this point, I'm the one that's wrong, right? All the people that invested in GEV are right. And I'll just stick to my lane, which is the stocks that I understand or the sectors that I understand, and I'll make money there. All right. So we wanted to take a look at Jazz. And this was a request. I forgot who on the stream requested it. See, Jazz Pharmaceuticals. So we're back to healthcare. They're going to announce on February 26th. So healthcare, again, hasn't been receiving a lot of love. Everybody's investing in AI, but not healthcare. Analysts think it's really discounted. Look at this PE, 5.66. Oh my God. How can a PE be like that low? That's a big opportunity potentially. Over the 5-year, not so good. Over the 1 year, not so good. No dividend. So these guys are growing single digit, not too bad. Okay. They have good cash flow, and they've grown it. See how they've grown from 664 up to 1,130,000,000. Very good. Gross margins. Look at these gross margins. Man, 92%. Beautiful. This is a very profitable business. So this looks really good. So this is like, it's like a $20 billion business. It's only market cap 7.3 billion. Man, healthcare is not seeing any love. See the balance sheet, make sure we don't have a bad balance sheet. $2.6 billion in cash, 6.2 in debt. EBITDA is 1.5. So they have a little bit of debt, nothing to be super alarmed about. I actually think net debt is less than 3 times, so that's okay. They should pay off that debt with their free cash unless they're growing. They're not growing, so. I mean, this one here looks really severely discounted. But we need, in order for healthcare to start working, the market needs to start buying into healthcare. And maybe this year it starts doing that. Maybe you see a nice rotation out of technology and other sectors into healthcare. This one here, most definitely, I agree with the analysts that, hey, this is highly discounted. They're going to continue to grow, which is good. They're going to make themselves more profitable over time. So the PE coming down to 5, are you kidding me? That's ridiculously low. So looks discounted. Looks good. So good luck with that. The final call of the day. HAFN. Hafnia. Are these guys the shipping company? Yeah. Oil tankers in Bermuda. Down 5%. Wow. 30% dividend. So these here, you can get this income flow, but dang, look at that. 213. Wow. And these guys just IPO'd, I guess. Yeah, they IPO'd, 2.5 years ago? Close to 3 years ago. They went up a lot, came back down. More recently, down 5%. I mean, if you got this dividend and your stock's only down 5%, you're still up 25, which is really good. The shipping industry is one of those things where you got to buy at the right time, you got to sell at the right time. And this one here, if you think about oil prices going down, I don't know what that's going to do to the industry. And you also want to study the dividend payout history, because maybe that was a one-time dividend and it's going to go away. So why am I not? Oh, dividends. Yeah, I would study the dividend history and see they're paying out a good portion of their profitability. And if they don't sustain that profitability with lower oil prices, are you going to see a lot of movement of oil? I don't know. We could see the same volumes, but if volumes go down and then the shipping rates go down, these guys are going to be losing money. So that could be a real negative. They've grown their dividend really nicely. So this one here is risky. If you like income, there it is. But the way I would treat this is I would get in and get out. But it's really not my cup of tea. If I spend time trying to figure out Hafnia, I've just burned time from trying to find the next, stock that's going to double every 5 years. I'm more of a investor that wants to see appreciation versus income. This is taxable, and I don't like, I already have high income. So if I earn more dividends, it's taxed at a very high rate. So I don't like that. But I could see why this is interesting, that really high dividend. And analysts believe that it's discounted because its earnings per share is good. So it's an interesting stock for sure. And it's rallying in after hours. So I wonder why. Is it that oil prices are up? No, oil prices are fine. Okay. Yeah, good luck with that. I can't add a lot of value there. This is not in my strong suit of where I like looking at companies. So I'd rather disqualify myself and say, you got to take a look at it. Make sure you know what you're buying, and good luck with it. So why did So Mark Anthony, what's up, man? Good to see you. And before we move to Mark Anthony's comment, be careful with HAFN. Okay, so be careful, buyer beware. And so Pfizer is, man, this is one that when you look at these guys are down 8%. They pay a really high dividend because of the stock price. Year to date, it's down 2%. Now, this stock is beginning to grow, and they're going to announce soon. They're growing by 31% if you look at the most recent quarter. And if they consistently stay there, this stock is really going to take off. And they're going to announce next week. In 2 weeks. And I'm really glued to this stock because I'm an investor, and I'm just seeing that they've made the turn and they're going to start growing. And we'll see if they announce that they grew again by 30% in the quarter. I have to guess that this stock's really going to rally. All the other fundamentals look good. These guys generate cash. They pay a big dividend. They have good patents. They have a very good portfolio of drugs that they manufacture. They have good margins. Just everything is there. They're back to free cash flow, very good margins, very good scale. A lot of things are there for Pfizer, and I expect that this stock's going to begin to work. We will see. Time will tell. Time will tell. So ask me the same question, Michael Anthony, in 2 weeks. Ask me on February 4th because they announce before the market opens. So we'll take a look at it in 2 weeks. Richie, QQQ. So this is the NASDAQ 100. I imagine it's doing really well because the NASDAQ is just breaking records, right? Really good. If you're in the QQQ, you're doing good. Set it and forget it. Looking good. So, Michael Anthony, I see your comment again, and I thought I just answered that, which I don't know why they sold off, but I could tell you that healthcare has just been like a sector that hasn't gotten a lot of love from the market. Let's take a look at sectors, right? So healthcare in general, you see how the 1 year is 10% when the rest of the market is way up here at 34, 37, 41. Even consumer staples are at 21. Healthcare didn't even beat consumer staples. That's how bad it was. So the whole space has just been kind of not desirable to the marketplace. So why did Pfizer sell off? Is because healthcare. Johnson & Johnson, I went over it earlier. I think they're doing just fine. Sold off. We went over Jazz. Margins look good. Cash flow looks good. Worth about $20 billion, but the company's only priced at I think it was $5-7 billion. So it's across the whole sector, and it's just what's happening with healthcare right now. When's it going to make the turn? I think it's going to end up going up because once you get valuations like in technology, you have some crazy valuations, and just in general, it's very expensive. And once that begins to fail, that money is going to go look for a place, and healthcare is usually a very good place. So, let's talk again in 2 weeks. I think that's a good conversation to have. Hey, good night, Mike. Yep. And I'll be I'll be ending the live stream. And then I'm going to go join my wife who made dinner. All right, everybody. So thanks for tuning in. It was a good session. And I may not be able to stream for a few days. Might be till Monday night, Tuesday night when I stream again. Because I've got something to do this weekend, and I've got something to do tomorrow. So it'll be a little while before I open up a live stream. So I'm glad we were able to talk. I'll create some videos, but I won't be able to stream for until next week. So thanks for tuning in. I appreciate it. Everybody, have a good night. Good luck with your stocks. And let's see if this rally continues on into Thursday. Talk to you guys soon.